Hey guys, Jason here for TheChartGuys, taking a look at the tickers we covered yesterday. An important part of being a good trader and being someone who can grow as a trader is recognizing mistakes, and I think transparency is important, so I'm going to be doing a lot of these follow-up videos and discussing mistakes that I made or things that I got right. In this case, sort of neither. We're going to start with BA, and what we were talking about yesterday was the BA 4-hour time frame. Now, I was expecting a 4-hour higher low to continue inside this equilibrium, having just set a high at 182.65. I didn't think it would look like this, and I certainly didn't expect us to break that 182.65 and not have any follow through. So let's go look at how we got here. 5-minute time frame, we had a much lower open. We saw the bulls take advantage of this low, which is quite strange, almost as if the bears really expected the price to drop and set a 4-hour higher low today, but bulls took advantage of this oversold opportunity because we opened oversold, poured on the steam, sort of resumed the 50-minute uptrend, then broke bull right into overbought territory, and then rejected from just into 5-minute overbought, and then sort of went sideways for the duration of the day. So it's almost like something just crazy happened, caught both sides off guard, and now we're sort of settling into trying to figure out what's happened. And that's a lot of what trading is. There is periods of price discovery, and then there's consolidation. So right now on the 5-minute time frame, we're consolidating after this strange 4-hour higher low, which we did expect. We just didn't expect it to show up like this. And then we hit a new high, which we expected, but not like this at all. So where are we on the 4-hour time frame? Well, we're still in this tightening range. We've seen some weakness. We've seen some strength. But what we've established is a key area of resistance. We've hit it the same area within a 30-cent spread twice. And on an almost $200 stock, that is a nice little area to work with. And that's what we call a zone of resistance. So that does become more important for us. And it becomes more important for us because we moved away from that. There's a definitive area that we need the bulls to take over if they're going to break to the upside. So in combination of being aware of the 4-hour tightening range, we're also now going to be aware of the significance of the 182.95 to 65 range as a key level for us. There is a lot of opportunity here for the bulls, but again, that strange open shows us that the bears are not done. Maybe overeager, maybe the bulls took advantage of that, but right now we need to be paying special attention to this configuration. And there's a couple of things you can do here. You can try to draw in, and I haven't done this pre-video, so I don't know if it's going to work very well, but I believe in drawing, and I believe in spending a lot of time fooling around with trend lines and making sure that your thesis is correct, or at least can't be negated by a trend line. Trend lines do exist, and they're very, very useful for trading. So if the bulls want to stay inside this 15-minute trend, maintain support, let's see where they open tomorrow. If the trend line works, great. If it doesn't matter. What we need to do is keep hourly higher lows. We need to break 182.95, and this will be the key level for the bulls to get over in the short term. Hourly time frame, here's a low, higher low, key area of resistance. That's what the bulls need to maintain, higher lows, break that. If they fail to break 182.95 to 65 and we see an hourly low underneath, what is this level? 175.39, then that is going to be even more indecisive, and it's going to tell us that maybe, just maybe, we haven't really set that 4-hour low yet. So a lot of options, a lot of unknown in this chart, and that is what happens a lot of times when we get inside these long extended equilibriums where we have a real sense of balance, which often results in choppiness. But 182.95, 182.65. If we break that in the short term, we'll do another video on it, but that's where I sit currently. SPCE, another strong green day, still overextended on the daily time frame, still seeing some upper wicks here on the daily and approaching that 2801 key resistance level. Now, what we were talking about yesterday was the lack of clarity on the hourly chart. We had an hourly uptrend, we lost hourly key levels, not much follow through, and then we see that again. Hourly levels established from yesterday's trading action, pre-market drop below, but we continued straight up. Straight up is a relative term. We went slowly to the upside. Now, what we were talking about was the 4-hour chart being the more definitive, higher clarity chart that we were going to be paying attention to. 2205 was the level we needed to watch, and what we were looking for was a higher low above that level. So that was established for us this morning, pre-market, right here at 2370. Is that correct? 2375. So you can ask a couple of questions. Well, how did you decide to use the 4-hour time frame? It just made a better picture, and that's really all there was to it. We kept higher lows, we lost hourly key levels, and the 4-hour was the most clear picture of what was going on. Now I have hidden EMA 12 because this happens to work out pretty much perfectly. We're seeing key support levels on EMA 12. Our last EMA 12 touch was relatively in close proximity. We see it again and again. So a perfect pre-market buy, seeking that 4-hour higher low right at EMA 12, and it's worked out wonderfully in today's action. Now, what are we looking for this to change? Either we can keep the 4-hour trend going up into that 2801 resistance, which we're getting very, very close to. If we open here tomorrow, I think that's within striking distance of the bulls. I'll be looking to take profits if I was in a long position at that point. Otherwise, what I'm going to be looking for is a loss of 4-hour higher lows. We know that we're okay to lose hourly higher lows without much follow through or concern. But if we start losing 4-hour higher lows and change the 4-hour trend, that's going to be far more significant. So if we lose 23.75, we're going to be looking for daily consolidation at that point. And our next daily support would be 22.05. So something to watch out for. PLUG on the 4-hour time frame. I was hoping to get ourselves a nice ascending triangle, and I wanted to see resistance check 966. I was hoping that we would slowly establish consecutive higher lows and get a sort of descending triangle pattern. We may yet, but the fact is we saw some volatility in yesterday's action. We didn't get over top of that to test at 966, so now we're seeing a tightening range. In fact, if we go to the 3-day time frame, which I rarely use, we get an inside bar. And what that does is it just shows you that tightening range that we can see on the 4-hour time frame. Taking into account all of this data, we've got an extreme range at 966 and an extreme range at 816. So this is going to keep tightening up until it breaks. We already know that on the daily time frame, we've got a really extended quasi bull flag, and the further we get away from this, the less likely I'm going to call it a bull flag. So I'm going to focus on the short term. So what we need to do is still see a break of 966. That is the key level, much like when we were looking at BA, we've established that zone of support at 182.95 to 65. On PLUG, it's much more clearly defined with a strict double top. We're going to be looking for a bull break over 966, or if we establish a more definitive intra-pattern resistance, we'll be watching that. Otherwise, a break of 867, 833, 816 is going to have us well on our way at negating whatever potentiality this quasi bull flag had. So a couple of key levels for us, still setting up nicely, looking pretty good on PLUG. And that is it for today. We're going to check out some new TCG checkers in another video. If you have any questions about these, feel free to post in the comments. I'll do my best to answer them.